Hey guys, Jerry here. I wanted to do a video on Bitcoin falling wedge structures, specifically this one right here, because I find that these falling wedge structures, and what I mean by falling wedges, if you take these three, if you take specifically these 3 points right here, okay, and you extend out this line, let's change this to a default, and you extend this out really far, hold control to duplicate it to the bottom end of the range, you can see that price does a really good job respecting these two trend lines, okay? What's interesting to me too is you have a little deviation above here, you have a deviation below here, but then you fall back into the structure, right? Of course, you have these deviations which make it exponentially more difficult to trade, but it's not until this price action right here, almost like a sinus strength, that you really break away from this structure, right? But anyways, I wanted to do a video on this because typically I don't like using trend lines. I like using horizontal lines, finding horizontal structures, but regardless, in trading, there are certain structures like falling and rising wedges, which require, I feel like, it's best to look at them and to interpret them using trend lines, okay? The question becomes then like how to determine that that structure is valid, because if you're using certain trend lines, you know, anything can become a trend line, you know, and I think it's really easy to get into the trap of, you know, like, okay, looking at this right here, like, okay, this is saying something like, okay, this is a potential trend line right here, you know, which in this case scenario would have worked out really well. But, you know, if you're viewing this live, like, okay, maybe this is a trend line right here, you're right, or maybe this is a trend line right here, or this is, it just becomes really easy to get into that trap. But regardless, I think in certain situations, it is best to interpret certain structures using trend lines. But anyways, okay, I think I'm rambling on a little bit too much. Let's talk specifically about this structure. Before we do that, I'm going to zoom out a little bit so you can see a little bit of an overview of this long-term Bitcoin structure that we've been in, just an accumulation zone. Specifically, we had this big move up, very bullish price action right here, and this sharp move down coincided with the CPI release. And then after that, we just had like a cascade, just some very bearish price action right there. And during that time, I really did not trade this because I don't feel confident trading that sort of stuff. But anyways, let's get back into the 5-minute time frame. Unfortunately, I'm unable to be on the 1-minute time frame, so we're just gonna have to deal with the 5-minute time frame. Okay, so one thing I noticed when studying this structure, of course, is let's take the ray. Okay, the ray. Okay, we're gonna take this point right here and specifically go to this point right here. So I'm gonna template main. Sorry, bear with me. I'm gonna save this as default. Okay. So specifically, if you take those 3 points, I would say this trend line has 2 touches because I do not count the first point as a touch. Now, if you take that and you hold control and you go down to the bottom of the range, okay, specifically looking at this cell, this wick right here, you can see the fact that you have multiple touches and the fact that prices respecting the trend lines, I think shows that this structure is indeed valid, okay? And I would ultimately look for 2 touches at least, okay? So you got 1, 2 up top, and you got 2 down here. So if I was trading this live and I saw that, then that would go to show me that, okay, this is a valid structure and to pay attention to these lines. Now, the difficulty becomes in determining deviations, you know, like this area right here, okay? I think that's where people are going to get tripped up, and this deviation right here. But also, if we can determine those deviations and we can determine that volatility, that gives us very good opportunities to make really big trades. Because if you were to cop a short there with 3x leverage, that would have been a nice 24% trade. Okay, so now that we've established how to define these structures, okay, and how to interpret these structures, now the question becomes, okay, how can we tell when we're going to get these deviations, right? Or when we do get these breaks? Because it's also very easy to trick yourself into believing that when you get a break out of the structure, that it's actually bullish, you know, and you're going to see some up price action. And I think that's where a lot of traders get caught, is because they long out of here expecting there to be bullish momentum, or they long on a retest of the structure when in actuality, it's like looking really bearish. Okay, and I think the best way to do that is using volume. So just looking at the video, this is a 5-minute video, this is a 1-day video on a 5-minute chart. You can clearly tell that this point right here coincides with right there. That is our selling climax, right? And throughout this period, we have slow growth in volume, right? But look how choppy it is, okay? It's very choppy. So that is not, there's nothing that is bullish here. I would say this is very bearish because you have a lot of red here. And specifically, if we look at the other time frames during this period, you can see 15-minute video, very bearish, 1-hour video, very bearish, rejection off of this neutral zone, just in rejection even here, just very bearish. 4-hour video, also looking very much the same. So you can see in it looks like it's specifically this area right here. Yeah, this area right here is where everything's very bearish. So that tells you to be expecting further downside. Okay, the question becomes, okay, if we're expecting more downside, then we want to start looking for shorts, right? And I think the best way that I've learned to determine best where to short is, first of all, if you're expecting bearish, you're gonna want to be shorting in these green areas on the video. Okay, I wish we could have looked at this on a 1-minute chart. Unfortunately, we don't have enough data, but in these green areas specifically is when you're going to be looking for shorts. Okay, so if the video is green and you've approached the top of the trend line, that could give you a signal to short. Okay, but also what you have to watch out for is, for example, video is green right here, you're at the top of the trend line, it would be very easy to take a short there, but then you get liquidated in this move out right here. Okay, so I think it's important to look at all time frames. Okay, see it specifically in this period right here, you can see that the 15-minute is trending up, although it is unable to close above that peak right there, right? Also, the 1-hour video is trending up right there. 4-hour is also, let's see, in this area, 4-hour, not really much signal right there. So that is just something to watch out for. Another thing is if you use the fixed volume range, okay, and we just go from the start of the structure to, let's just go to like right here, you can see clearly where the volume is, and right here would have been a perfect point of entry or point of interest, POI right there. So if we were trading this and we expect, okay, we're going to have a deviation here, this little pocket of volume would have been a perfect area to snag a short, right? Especially with the trending down volume, you know, and then if you even wanted to go back even further, let's start from the top of this move and go back down here. So you have a lot of volume in this area, and then eventually you could say we're going to come up here. If the volume warrants it, then we should have a move up to here. But according to the volume, at least at this time, everything's very bearish. I don't know if we have the momentum to make it up there. And I think eventually, oh, it looks like we have yet to make it up here. Okay, so that's something to pay attention to, potentially 20.7. But anyways, okay. So using the anchored fixed volume range to determine points of entries, especially in these falling wedges, to determine like if you get a deviation, where is price most likely to end up. I think that's very important. Another interesting thing is this deviation down here, and I was curious, like, how could you determine how low this is going to go? Okay, obviously if you're shorting here, you might want to just take profit at the bottom of the structure, depending on what you think price action is looking like. Okay, but in this case scenario, since price action is so bearish, you know, it would make sense that, hey, we're going to take out this low. Okay, the question goes, like, how far are we going to go? Okay, so if I was trading this live, I probably would have taken profit at the bottom of the range. But given this deviation, okay, where would be a good place to look for an entry? And what I found is if you go to like the 30-minute time frame, okay, so here, sorry, okay, because what's interesting too is if you look at that right there, you also take out this low right here, okay, and you have a nice little deviation below here. So the question becomes, okay, like how could you have determined an entry in this area right here if you were specifically looking for an entry? And the way you could have done that is if you gone to the previous local low. So here, let me zoom out a little bit. So this is this right here is the previous local low, okay, because it is lower than this point right here. So if we come in here and we do the fixed volume right here, so let's go from here to here, you can see we get a nice POC. Oh, sorry, this is kind of messing up for me. Okay, so let's go from here to here. You can see we get a nice POC right here, point of control. So if we take a line, put that right there, and come back forward, you can see that price hit that perfectly. Nice little wick down. Okay, let's go back to a 5-minute time frame. So trading this, I know it's a lot easier to do in hindsight than done. But if you're trading this and you're like, oh, hey, I'm very bearish, okay, I'm expecting us to take out this low right here. Okay, where's the lowest? Where's a good place to look for a long? Okay, that would be the spot because you have that POC from the previous volume. So then what you might want to do is you look in here and then look for, I'm going to remove this right here. It's like, okay, once you take out that low, okay, that's my trigger to look for a position, right? And then at that point, you can start looking for accumulation. So this would be your selling climax. You can change that to tiny. Okay, there's your selling climax. You could view this as the automatic rally right here. And then this is your structure test right there. Okay, so this can define your range. Although, seeing how this played out, it might have been best to actually have this as your automatic rally. Because I know this is like your selling climax right here. But this demarcates like a really large range. So maybe it'd be best to have that right there. I'm kind of just talking out loud. And then you can see right here, you have your spring. So you have your spring right there. What's another way to view this? Okay. You could also have, okay, you could almost see, you could see this as a deviation too, and you could have this is actually the selling climax. This is your automatic rally, okay, because price tends to be respecting this a lot, okay. Then you have like a terminal shakeout, a very big spring right here, and then you got like a test right here, okay. And if you wanted to zoom in even further, I wonder if you did a volume profile for right here, it might look different on a 1 minute time frame, but anyways, once your entry could have been right here, or if you're looking for confirmation, once you get that terminal shakeout, you could re-enter on the bottom of here, or you could re-enter at the top of the structure. As you can see, we never really got a retest of this structure right here, but I think if we go forward a little bit more, we actually do get like another big liquidation event right here. But anyways, I'm kind of rambling. Once again, this is not financial advice. This is kind of just my personal journal, talking out loud, trying to understand these crazy markets. But anyways, okay, that's all I wanted to talk about in this video. I think that's how I would go about trading these sort of wedges in the future. Once you demarcate the range using volume to determine the general direction, and once you get deviations, looking for entries within those deviations and using the fixed volume range in order to determine best points of entry. All right, peace out.